Good afternoon, everybody. How are we all doing? Afternoon, ST, Mumo, Paul. How are we doing? Thanks for subscribing, Kevin. That's new. I've been mucking about my Streamlabs thing, and obviously Kevin's just subscribed. Hello, Kevin. Afternoon, Ryan. How are we doing? Let's start off with the news today. We've got quite a bit of news gone on this morning. Where's my pen gone? There it is. So yeah, we'll go through the news, go through the dashboards, go through the zones, usual stuff, have a look at everything. Got quite a bit of profit open on the zone trader account at the moment. So I'm going to go through all the zones. I might bank some of this today because this evening we've got FOMC. I'm not particularly worried about FOMC bringing up anything particularly exciting this evening, but I'm worried about Trump saying something at the minute because there's all this Russian stuff going on. So I'm going to look through the zones, and I might make some amendments and just close some stuff out this afternoon. Afternoon, Ryan. So news-wise today, we've already had the Aussie dollar wage price index coming out at 0.7, so pretty much on target. The New Zealand interest rates came out on target as well today, so that's all good. We weren't no shocks there. Basically, we had quite a bit of movement on the New Zealand dollar, which we'll look at in a minute, but nothing unusual, nothing unexpected. We'll have a look through what Trump said and what the press conference for the New Zealand was. We've had the pound CPI come out this morning, much bigger than forecast. So we're expecting it to go up the annual by 0.3. We actually got a 0.5. It's not going the right way. So that's bullish for the pound, but it's not good for interest rates for us in the UK. But anyway, so that's bullish pound. We'll have a look at the impact of that in a minute as well. So this evening coming up, we've got FOMC meeting minutes. It's not an interest rate announcement, so there shouldn't be anything too taxing in there that would upset the market, but you never know. And then we've got Orr speaking later, but obviously Orr's already spoken at the press conference this afternoon, or rather this morning, so unlikely anything will come out of that. Overnight, more Aussie news. So every day this week we've had Aussie or New Zealand news. We have the Aussie interest rates, then we've had the New Zealand rates this morning. Tomorrow morning we've got the Aussie unemployment. So just be aware, again, tomorrow morning Australian dollar movement before the market opens in the UK. We've got unemployment claims as well tomorrow afternoon, so we'll have a look at those tomorrow. But yeah, so basically busy day so far for news. We'll whiz through and have a look at the ADRs and RSIs. As you can see with the ADRs, obviously Aussie New Zealand, Euro New Zealand, Pound New Zealand, New Zealand CAD, New Zealand Swiss, New Zealand US. We had New Zealand news. So the New Zealand has moved. So whizzing through all of those, Aussie New Zealand's a fairly decent mover. Let's whiz down into the 15 minutes so we can see what happened. So this morning we had this move basically straight up, which was 55 roughly pips to the upside. So that was your ADR hit to the upside. If you did take that, well done, you're straight out. We've now gone 150 ADR back in the opposite direction. So the market, basically the initial reaction to the New Zealand dollar news here specifically was weak New Zealand, and then massively strong move on the New Zealand. Looking at the Euro New Zealand, same thing. Yeah, so as you can see, I've got a sell on here at the moment, which is nicely in profit. But yeah, big moves on all the New Zealand dollar pairs, but a real A-shaped recovery within literally an hour or so. This thing spiked up and came all the way back. Afternoon, Silky, Virginia, FTNet, how we doing? So we've got those. So you've missed the ADR reversals on these. They've actually given ADR reversals in the opposite direction. So you can see we've already had a reversal alert down here on the 15-minute time frame. We're going back the other way now. So you've actually today, it's one of those rare days where you get the opportunity to take a reversal alert at the top, get a profit, and then get back in the other way and potentially profit both times. So it's pretty mental day on the New Zealand. So again, big spike up, reverse back down. Now we're looking to go back up again. New Zealand CAD, New Zealand Swiss, New Zealand US, all the same. So yeah, very weird day today for the New Zealand dollar. The pound off the back of the interest rates today. So they came out at 7 o'clock, which was around about there. And as you can see, that is the market reaction there to those CPI figures, not interest rate, CPI. So not a lot of movement, a big whipsaw. This is potentially long-term bullish for the pound, but the market at the moment so far today not really doing an awful lot with the pound. It's actually a little bit weak today, as you can see. Strong yen movement coming in as well at the moment. Got a yen push going on at the open. So yeah, so it's a bit of an odd day today, but New Zealand dollar the main mover today. Afternoon, it's time. So quickly going over the overnight news and everything. Canada's Trudeau has just come out. If there are tariffs bought in Canada, our response will be immediate and strong. Yeah, okay. So they're basically just telling America that they're going to do what they tell them to do. Putin's been saying a lot as well. Putin saying a lot. So let's go back to yesterday, because obviously we need to look at all the news that's happened overnight. So back yesterday, obviously, we had all these talks from about Ukraine. So the upshot of this is at the moment very confusing, because at the minute it looks like basically Europe and everybody is being moved out of all talks to do with the Russian conflict. So Trump and Putin are going to decide basically the outcome of the rest of the world. So there's also more talks of tariffs from the US, 25% on pharmaceuticals, auto imports as well. So basically what Trump has done yesterday in his speech was announce potentially more tariffs, which is great, and obviously news about what's going on in Ukraine. However, these tariffs, obviously, that we keep getting announced or talked about, none of them are coming into play, because basically every time he says it, the other party, like Canada, goes, screw you, I'll give you 25% back, and it doesn't happen. So this is all just chest beating and makes the market move up and down, but it doesn't actually do anything. So at the moment, we had a lot more hot air coming out of Trump and absolutely no movement. Nothing's been signed off, nothing's happening. Ukraine is trying to fix, but not talking to Ukraine. So, you know, and it came out obviously yesterday and said it was Ukraine's fault for starting the war. Guy's off his head, really, really, really off his head, isn't he? But anyway, so we'll have to see what happens with that. So be prepared for a lot of Swiss franc and yen movement. We got some coming in at the moment. Obviously, Swiss franc and yen are safe haven currencies. Whenever we get uncertainty or stupid things happening in the markets, the yen and the Swissy rally. So just be aware if you've got any Swiss franc exposure or yen exposure and you're against it, because it could well rally quite hard. We had the overnight Australian news coming in there, the New Zealand news with the rates, which were as expected. The press conference didn't give us any information for forward guidance, nothing unexpected. So everything is just kind of going along nicely. CPI is okay. Interest rates should continue to come down, the same as everybody else has been saying. So there's nothing really. This is why we didn't get a massive shock on the New Zealand, because there was nothing shocking in the press conference. So basically, we just didn't do anything. So all as expected, all factored in, so nothing exciting there. There's nothing came out the yen overnight. So really, what I'm trying to say is the upshot of the overnight news is no change. So it's all the same, but it's just a lot of volatility. There's your CPI this morning for the pound, big miss on that. Interesting to see what the Bank of England come out and say now about potential forward guidance on interest rates. Those are potentially going to change. ECB, again, continuing to go on about potentially cutting interest rates, but it's getting a little bit more cautious now because inflation's getting a little stickier. But they're pretty much back to where they wanted to be target-wise anyway, so it doesn't matter. So lots and lots and lots of news. This week is absolutely crazy for forecast news and for stuff coming out the blue. But really not an awful lot of market movement. If you look at, wrong dashboard. If you look at the overall movement this week, we haven't really gone anywhere yet. We started off there, and we're kind of there on the Aussie New Zealand, so not an awful lot of movement anywhere. The euro still coming down, which is understandable. Weak in the eurozone, but yeah, stuff's just not really going anywhere. We're getting an awful lot of whippy movement, but not an awful lot of anything else, unfortunately, at the moment. So, which isn't bad when you're mean reversion trading, because as long as it goes up and down, you've got opportunities to make money. It's when it goes into hard trends that we tend to struggle. So there we go. So ADR dash and everything today. Those are your ADRs. We've got one weekly to look at, which is Aussie New Zealand. You've missed it though. It was there. And it's done. So it's already actually undone 50% of the entire weekly range, literally in the last sort of 5 or 6 hours. So you've missed that one. If you did get on it, well done. Unlikely you did, though. RSI's absolutely flat. Again, we're not getting any movement RSI-wise. We are moving around, but we are not moving hard in any direction. So again, ADR reversals, RSI reversals. This is the RSI mean reversion account, struggling to get any positions on. I mean, I've got a couple of trades on, but it's just not triggering any entries at the moment. It's absolutely shocking. We're sideways. The whole month has been like this, as you can see. Really hard to bank anything. So yeah, very, very tricky month at the moment. It's great for the zones, because obviously we'll go through the zones in a second, but the zone trading strategy is literally support, resistance, supply, demand, and it's just bouncing off of all these levels all the time. So this is the beauty of diversification. When one thing isn't working, the other one tends to. And as long as you've got different strategies running, one of them usually will be successful when the other isn't, because there's no strategy that works in all market conditions. So yeah, it's doing very well. We'll have a look at all that in a minute. The zones. Let me just catch up on the chat. Afternoon, David. Position trading is going so good since I put RSI to 70-30. Cool. You won't be saying that when you get your first squeeze, and you get in before everybody else because you're at 70-30. There's no right or wrong. 16% in January, 12% this month. Awesome. Good job. Just got back from a few nights away in Tenerife. Straight to the live streams. Good man. A few nights in Tenerife. That sounds dangerous. Those are also 2 months with no squeezes. Yeah. Yeah. Staying on green consistently in open positions. This didn't happen in the previous 6 months when I was consistent, when I was in a constant 7 to 8%. Yeah. It's a different market. This year so far is a very different market. It's Trump land. Yeah. This is kind of what I keep going on about. The markets change. Yeah, this is the bit that people don't really fully understand until you've been trading for sort of 3 to 5 years or more. Markets go through cycles, and when you're looking to start trading, or when you start trading, your first 6 months to 18 months or to 2 years or however long is spent looking for that system or strategy that makes money, which obviously you soon after those 2 years realize doesn't exist. So you basically then end up looking at other things like seasonal things and all that sort of stuff, and you realize that there are seasonal things. There's some markets move stronger in other times, and summer's always dead and really hard to trade in. And then you suddenly realize, after you've been trading a strategy successfully for a while that stops working, that there's a reason for that. And it's because market regime changes. At the moment, the market regime since Trump's got in is totally different to Biden's regime, which was totally different to Trump's regime before that, which was totally different to pre-COVID and post-COVID. Yeah. Interest rate rallies and interest rate freezes have completely different market regimes. There is no strategy on the planet that will work in every regime. This is the problem. Spreads were not a problem 3 or 4 years ago. Now, if you're a swing trader or a position trader, they are the only thing you need to be aware of, because you're going to hemorrhage every penny of profit on that if you go the wrong way. So, you have to adapt to everything that happens. And adjusting your indicators will benefit you while the market regime holds. But dropping from one RSI setting to a different RSI setting, or using a faster one, so swapping from a 21 to a 14 or something like that, will work really, really well when you identify the regime has changed. The trouble is, by the time you've identified the regime has changed, it's going to start changing again. So you start using a different strategy, which will work, and then all of a sudden it doesn't work again. You have to adapt. That's basically what trading is, changing. And this is why position trading is so successful, because we can adapt a lot easier than the majority of traders out there that use a stop loss. When all of a sudden most traders who have been trading their strategy successfully with a 25 pip stop loss on the Aussie New Zealand, suddenly that thing jumps to 5 times that ADR, their 25 or 50 pip stop loss is not going to work anymore, because the market regime has completely changed. So yeah, it's all about adapting. So be aware, tra-la-la, that when your squeezes start, that is going to be you being in earlier in those squeezes. So just be careful. What are your settings for RSI? 70-30. I have a lot of trades on. My settings for RSI are 70-30, but last candle close must be above or below the level, and I'm trading the hourly time frame. So if you're trading on a lower time frame, you'll have a lot more entries than me. But this strategy has been tested over all market regimes. A 15-minute entry and a 5-minute entry is going to be more successful than mine at the moment by a long shot. But when you get into a squeeze, you'll be squeezed on 10 currencies and I won't be in any. Swings and roundabouts. How did your 1-minute scalping go yesterday? 12.26%. I've got 1.93 open at the moment. Let's shut some of that out. Let's have some of that. Get some of that off. Get rid of that. What's that? 11.7. Get rid of that. Don't want any red. Get rid of all my red. There we go. Done. So I did 12.26 yesterday. Done 10.13 today. Sitting in 0.58 drawdown. Not bad. This has been running basically all day, just doing the 1-minute scalping, using the Trade Manager Dash and the Position Trader EA. Just making money basically, isn't it? It's great. Are you still trading the ADR as a separate strategy? Yeah. Yeah, it's not going particularly well at the moment, ADR reversals. It's down 4% in the last month, up 1% this week. Got 0.25% open, but yeah, not doing particularly well this month, ADR reversals. Mainly because we've had some very strong ADR moves, which have gone like that, and it's stopped out. So this is using a stop, basically a two trade stop. So it does go through periods like this in the testing. So it's just one of those periods where it's not going to make money. But it will do. Long term. I did not know you're trading RSI with 1-hour candles. Yeah. It's the set file I put in the Discord group a while ago. That would pass prop in 1 day? Yeah, it would do, but I don't know what the drawdown was. Yeah, I don't know what the drawdown is, but I haven't been watching what drawdown is, so I don't think I've got the export set up on it either, so I probably can't get. Where's export? Yeah, it's not turned on, so I don't know what the overnight drawdown's been on it, but killing it at the minute. I found another bug in this, by the way. Well, it's not a bug. I've just realised if you set the dash to a time frame refresh rate of like 10 seconds, and you use these buttons to close out partials, I don't think the dash updates very quick. Let me just try that one there. I'm just waiting for it to update. This would be a good experiment. It's not a bug, it's just not something I've thought of. Yeah, so it's not going to update I have pressed the button, but it won't update for 10 seconds because there we go. So now that's updated. Shut 50% of that one out just for fun. Because I've got this set on 10 seconds as a refresh. I didn't think about that. So I need to get the dash to refresh instantly when we press those buttons. So I'll have to work on that and roll out another update for that. But yeah, good little strategy that. Right. Interested in learning what that 1 minute scalping strategy is all about? I bet you are. I'm not telling you. It's a secret. That's amazing. It's 100% automated. Is it available to buy? Yes. It's called the Position Trader EA. It's the EA that I use every day. I have used every day all my life. Well, not all my life. And it's basically put on a 1 minute chart. It is trading RSI mean reversion with 1% risk. It is scaling in at 5% of ADR with a 1.1 multiplier. And it is not getting out of trades at all. No targets. I'm just saying, get me in to a load of trades. And it is using a 70-30 RSI 5 on the 1 minute chart. That's all it's doing, literally. And then what I do is I close out stuff that's in profit, and I do drawdown control on stuff that isn't, and just make money, because that's what the market does. It just goes up and down constantly. So you just get into the trades, and the ones that work out, you close them, and the ones that don't work out, you close out partial and wait for them to become profitable. It's called position trading, WDS. I've been doing it in here for 5 years. It's just accelerated because it's on the 1 minute chart. That's all it's doing. You could set it, I mean, if you want to set it up fully automated, all you'd do is you'd put targets on. So it's using 1% risk. So maybe just get out of, I don't know, you'd have to muck about with targets and play around with it. But like with everything, you know, it's not going to survive. Nothing works on the 1 minute chart consistently. Because it doesn't, because the 1 minute chart is just purely algorithmic chop. Can you please shortly explain the drawdown button in the new dashboard? This one. So all that does, that button, is this is right. So let me just clarify this, okay? I did a member stream yesterday, and part of the member stream was drawdown control. And we set up this environment as a test bed, basically, to get into a load of trades and get into a load of drawdown so that we could show how to do drawdown control. Yeah. So it just takes trades. I accumulate positions, and then I wait for positions to go into profit, close them out, and I was demonstrating partial drawdown control. This result here is the result of price moving up and down. That's it. That's what it does all day long. This is position trading. I don't know how many times I have to say the same thing. If you use a stop loss, you will lose money and get stopped out. If you do not use a stop loss, the market will get you into profit at some point and you can close it out in a profit. That's proof. This is all that happens to the market. People are trying to find strategies that work in a special way. There's not. It goes up and down. You just wait for it. That's it. Wait for it to go into profit and then you take the money off. That's all it's doing. Nothing clever. But it's trading on the 1 minute chart. It's trading with high risk, and it will blow the account at some point if the market squeezes hard in one direction. Because look at the exposure I've got on. For example, on the New Zealand dollar long at the moment, I've got 3.61 lots on long. If that jumps down by 5 ADR, it will blow the account. Yeah. So this is not a tradable strategy. If the market is in rotation, which it spends 80% of its time doing, it will work 80% of the time. 20% of the time, it will blow your account. Yeah. So if you want to use this for prop, go ahead. 80% of the time you will pass, but at some point you will blow it because the drawdown will go too high. But I've just set this up. It was a demo thing for members yesterday in the member stream. So don't get too excited. You can set this up if you want to on the Position Trader EA. I've just shown you the settings. Very simple. Stick it on the 1 minute chart and get it to get in. But that's it. Right, yeah. So the button. So the drawdown control button, all this does is when you click that, it highlights trades which will improve your average price. So if we look at, for example, the Aussie New Zealand at the moment, yeah. So we've got, have I got support resistance? Propulsion. No. So I've got shorts on Aussie New Zealand. Yeah. So where price is right now, this trade is, I'm short. So that trade is in profit. This trade is ever so slightly in profit. This trade is in a loss. Yeah. So if I close out this trade or part of this trade, it will improve my average price. It will make the trade position better for me. Yeah. So what this button does is when I click this on the Aussie New Zealand, that's in drawdown because it's got trading costs on it. But when I click that button, what it will do is it places a box around any trades that will make my price better. So if I've got 3 shorts on, as I have at the moment, and my average price is there, clicking a partial close on that will close part of that, which will make my average price move up. As I'm short, that improves my position. Yeah. So all this is doing is highlighting. So whenever you want to do drawdown control, basically in your positions, all you do is you go, right, I've just closed out Euro US dollar. I've just closed it out for $30. I need to do some DD control. What's going to make my life better? What's going to improve my position? What's going to make my averages closest, giving me a faster exit on the trades that I'm in drawdown on? Everything with a box around it. So I've got $30 to work with. I've got $20 there. So let's close 25% of that one out. Let me just change the refresh on this because it's not going to work fast. Yep. So close out part of that. Whatever that was I closed out is 20 odd, wasn't it, on that entire Euro US dollar. So I've just closed out half of that. And I've got a bit more drawdown I can do on this one, so I'll take 25% off of that one. Yeah, draw down a bit more. And now basically what I've done is let's close out half of this Aussie New Zealand as well. So let's actually look at this like this. Yeah, so there's my average price on the Aussie New Zealand. Okay, there. So if I close out part of that Aussie New Zealand, which I can't get to now, over here, yeah, close out half of that. See, the average price has moved up. Yeah, that was the average price. Now it's here. So it's improved my position, made my position overall easier to exit and more profitable. Yeah, so whenever you're doing drawdown control in a position, what you do is you remove everything below the line. So if you're short, you want to close out part of below the line. If you're long, you want to close out part of above the line, because closing out stuff up the top in drawdown when you're long will bring the average price down closer to where the price is currently trading, giving you a quicker exit. Yeah, so all that button does is it shows you if you're going to do drawdown control, do not touch these, right? Don't touch anything in profit. Obvious. You don't close out partial profits if you're trying to reduce your average price. Yeah, this one here and this one here are in drawdown, but they're not going to improve my average price. These will improve my average price. Yeah, 151,475. If I close that out, I'm long on this. Yeah, so if I close that out, my average price changes to 151,454. It's closer to where price is currently trading on the US dollar yen. Yeah, so that's what it does. It is explained in the video, I believe. Not quite sure how much I explained in the video. Let me just shut this out and shut that out as well. There we go. So I'm up 10.5% on the day. Not bad, eh? We've got one trade on. So we'll come back to that in a minute. It's not part of today's stream at all. It's just mucking about. Anyway, let's go on to the zones. Look at the real money account with real money in it so that we can actually See what's going on there. Just wanted to see how the trend strategy is doing again today. Not a good day again today or yesterday. I don't think this yen is going to work. I don't think this strategy is going to work, unfortunately. This is something we've been developing in the members streams for the last couple of months. And I don't think the yen is going to behave in the same way now because, unfortunately, it's not got the interest rate differentials that it used to have. So I don't think this thing's going to trend anymore. And this is kind of proving the fact, isn't it? Anyway, we'll come back to that at another time. Right, so Zone Trader account this morning, I have closed out 0.29%, which was Aussie dollar Swiss. So that was closed out there at target, which was the highs. We've bounced off. So that's all that's closed out today so far. I've got quite a lot of profit available to me. So I'm going to go through and have a look at all the zones, reset all the zones, have a look at where everything is, and see what the bank really. So I've got a lot of profit I can close out, a lot of partials I can take as well. But I just want to see how close everything is to zones really, and decide whether or not to bank stuff. Just worried about at the moment Trump saying something, and I've got my US dollar exposure at the moment, as you can see, is the highest. So I've got quite a lot of long exposure. I'm only exposed long on the US dollar. So I'm just worried about Trump actually signing off some of these tariffs because the US dollar is going to collapse. And I'm also worried about Europe's reaction at the moment to what Trump's saying about pulling out of NATO and stopping funding for Ukraine. Again, there's potential for a lot of reaction to the US dollar on that. If that happens, all the European investors are going to pull money out of the US, which means the US dollar is coming down again. So I'm just a little concerned about the amount of exposure I've got on the US at the minute, but we'll have a look at all the zones individually. So US dollar CAD, shorts on that one at the moment, obviously looking for the lows as a target. Highs are the next entry short, nothing's changed. Aussie dollar Swiss exited, so I need a new long on that. Short target on a new long. It's the same zone basically, isn't it? Difficult. Stick it up there for the minute because I'm not actually in long yet. So let's try and get back in. Can't really even see a decent long opportunity in this at the minute. So we're pulling back. We've double topped. There's a good chance we're going to form a range here. So I'm going to go down here. I'm going to wait for the market to get back down here. Swiss franc strength on anything that goes wrong is going to drive the market back down into there. So I'm going to look to see if we can form a range in this area here. You know, so just want to go long down there somewhere. Aussie dollar, New Zealand dollar have shorts on at the moment. I adjusted the zones on this morning after that whipsaw. So basically, if we pushed back up into double top territory today, I would take a third short. Haven't needed it. So looking to get out at these lows. So all targets are still intact. Everything's still the same as it was yesterday and pretty much on Monday. Just got 2 trades on this one now. Aussie dollar, US dollar, got shorts on at the minute. Next entry is going to be up at previous resistance there. So this is the previous support. We broke through it, retested it multiple times. We tried a price discovery back above it, couldn't get through, retested it and shorted. We haven't tested that level since, so that will be third entry short if needed. If not, I'm going to watch this level here. So this area here basically is where we broke through. This wasn't real. This was Trump. So this is where we were accumulating before that. And then we basically came back to that same level and we've broken high. So this is my downside target in case we start to form a range to the downside. Afternoon, Matt. So yeah, shorts on that one. It's not going anywhere at the moment this week. CAD Swiss, again, got a long on this one. Hasn't got to target yet. It's not going anywhere. Stuck. Everything's just stuck at the minute. Really stuck. Which is why I'm considering taking some money off, because we're just sort of flip-flopping at the minute. I might as well just take the money off, and you know, we can use it. Right, okay, so euro odd. So I was watching this low on EuroOdd for a bounce, and we have got it. So I'm looking for this to get down to propulsion, but I was watching that area as well for potential bounce point. So let's have a look at the profit on this. 0.21. I'm just going to close that one out, EuroOdd. So I'm out of EuroOdd in the bank. So new shorts on this one. So if we can get back to so basically this area of accumulation break here was what we kept buying up. We slammed through it, retested and broke, came back to it. We've gone straight through it and put a new leg in short and then retested it. So I'll try and get a short in here. So if it's going to form a range low here on its way down to this propulsion gap, I'll look for it to hit that area there and then flip down into here. Obviously, if it doesn't, I'll take a second short there. So we'll try and get back in there. But I just want out. I want to reduce some exposure a little bit at the minute. So I got too much profit on the table to just leave everything open. Shorts on Euro CAD. Not gone anywhere this week, so I'm still in it. Target, I've only got one short on because it's just not gone anywhere. Since I got in last week, it's literally just gone nowhere. So next entry short is if we can come and test last week's high, which is here, which is this previous little bit after the drop. So yeah, just looking to get in on that propulsion gap basically. So this propulsion gap here, they've tested that twice. If they test it a third time, I want in on it. Otherwise, I'm looking for it to come back down into the lows. Again, I'm going to watch here. When we get down to here, if I spot it there and I spot a bounce starting, I will probably just close it out. But we'll wait and see. We're not going anywhere at the minute. Euro Swiss, longs on, stuck. Got into this last week. We haven't gone anywhere. So still in it. Next entry is down at this little wick, which is the break here. So this little accumulation, we tested it, broke it, retested it, rebought it. So I'm looking for them to rebuy that. But it's the euro, should be bearish, and it's the Swiss, could be down there in minutes if something goes wrong. So at the moment, I'm assuming we're going to stay fairly range bound, which we tend to do most of the time. You can see all the previous trades on this: in, out, in, out, in, out, in. No, I'm in again. It just goes up and down all the time, the Euro Swiss, and it doesn't move very far. ADR is very low on it, so it's a slow mover. So next entry long there, next entry after that one will be there, and then we'll wait for it to push back up in that range and get out at some point later. Euro Pound, looking for new shorts on this after getting out the short day before yesterday. Yeah, day before yesterday. So I'm looking basically for a pull back up into there, and then we'll short that. Euro New Zealand, have a short on at the moment. Where's this bouncing? Yeah, it's coming off the lows as well. Look, so Euro New Zealand's coming off the lows. We're holding this area here again. I don't think there's enough profit on it. 0.16. I'm exposed in both directions. I've got longs and shorts on both the Euro and the New Zealand, so I don't really care. I'm just going to leave it on, I think. This is a very strong push from the New Zealand off the back of the interest rate change. So I'm hoping we will just pull back and we will finally break that level, because that's a pretty big reaction we've had today there. So I'm going to hold that one short. Obviously, if it doesn't work out and we just stay in this range here, then I'll have to take another one up the highs and then get out when it comes back down again. But I'll leave that one running for the minute and give it the benefit of the doubt it's going to break the lows. Have sells on euro US dollar. So target on this is kind of these lows from last week, which was the previous highs in that week as well. So this is the V-shaped recovery from Trump. This is the level that we were holding prior to that, which we held multiple times. Yeah, and again there. So that's where I'm going to get out on the shorts. Next entry long is all the way back up here at these highs, because this is too close. But nothing's really changed on it. Nothing changes much. This is the problem at the moment. It's all very sideways, isn't it? Longs on pound odd, looking for target up in the previous week's highs. Next entry short, that's too close. So I'm looking for somewhere in here. So this is a very big zone I've got down the lows at the minute. Reason being, it's part of a massive V-shaped move out of these highs here. So I'm looking basically anywhere in here, which is where we bought from, and we made a new high, for this to be the lower high and potentially get retested. So somewhere in here I'm expecting to find support. Very difficult to pick an exact level, so I'm just going to get in somewhere around there. So any kind of price action down here that's bullish, I'm in. Pound CAD, longs on, not going anywhere, stuck. It's in profit, but it's stuck. Can't do anything with it. Exit is in propulsion. So I'm looking for the top of the propulsion gap to be filled, which is our previous high before the Canadian tariff threats and unthreats. Pound Swiss, first long on, so got something to do. Need targets on this. So next long entry, very simple, very easy. So we've got these previous highs, broke through it. So this is where they're selling from. We broke that level, then we bought it, bought it, bought it. That's where I will buy it again. Targets to the upside. Blimey. So if we break these recent highs, the next level of interest is here. So it's this little nick here we had. We flew down, we retested that level, then we resold it, then we resold it again, then we broke it, tested it, tested it, tested it, broke it. We haven't retested it. So that's where I would exit. So that's my short, exit on the longs up there, which isn't far above these highs. So look for market structure continuation. I'll get out there. Pound US, have sells on, gone nowhere this week. So that zone is intact. This is the propulsion move to the downside that was retested. We haven't tested it again. So that's where I'm getting into my next short. At the moment, though, we're not going anywhere. We're just stuck sideways. Nothing to do. New Zealand CAD, longs on. Almost got to target today. Pulling back at the moment. So the 3-bar reversal going in at the moment. Oh, speaking of 3-bar reversals, I've got a new version of the Position Trader EA, which I'll go through in a second, which has 3-bar reversals and reversal alerts in it. So yeah, we've got 3-bar reversal going in here at the moment. So as long as this ends up bullish, we should come up and retest those highs. So that'll be out today or tomorrow. New Zealand dollar Swiss, looking for longs. Got out of the last long last week and got out, that long this week. So looking for a re-entry. Still waiting. New Zealand US, 2 shorts on at the moment, waiting for a push up into the highs for a third, or looking to come back down and retest support for an exit. US dollar CAD, totally stuck. 1, 2, 3, 4 days, totally sideways, absolutely not moving, not going to do anything while there is threats of tariffs in both directions. Doesn't matter what you do, Mr. Trump, they will do exactly the same. Justin Trudeau came out this morning and said exactly that again. So you cannot put tariffs on the Canadians because they will just tariff you back. And all that's going to happen is the US citizens who use wood, all of them, will have to pay more for their wood and oil. The US citizens that use oil all of them will have to pay more for their imported oil. The two things you get from Canada, as well as maple syrup, which they put on their breakfasts, they will have to pay more for. So that's not going to happen. So while that's not happening, nothing's going to happen. So we're stuck. I've got 3 longs on it and it's just stuck. So I've been in this thing since 4th of February. And obviously I bought these highs, assuming we were going to continue our upward trajectory. And all that happened was we dropped and then sat around for over a week and a half. And then we had one news event. And now I've been sitting around for another 4 days. So there's nothing I can do with this at the minute. Trump is not helping the US dollar in any way, shape or form. So I'm stuck. I'm still going for this propulsion move as a target to the upside. However, if we get back here, it's highly likely I will get out there because I've been in it for a long time. It is costing me, it's not costing me much money to hold it. I mean, the swaps on it are virtually nothing, I think. US dollar CAD. Yeah, I pay 30 cents down in swaps. It's nothing. But it's just not going anywhere. So I'd like to just get out, really. So this propulsion gap here, you can see, is the lowest propulsion move after the initial undoing. So that's my upside target. And US dollar Swiss, I have longs on. 2 longs, it's slightly in profit, not a lot. So I'm looking for a retest of this area here. So this accumulation, which we broke through, we retested it, rebought it. Then we slammed through it on the news. We didn't quite get back to retest it. So I'm looking for them to come and retest this propulsion gap here. So it's this propulsion gap. So I'm looking for them to retest the low of that. It may well just get to there and hit this accumulation and they may stop at that propulsion gap, but just one of them want to go and test. We're going to test one of them at some point. So there we go. So just quickly looking at profit. Euro US dollar, I've got one trade there I can take off, which is $90, which would reduce some of my US dollar exposure. And I've got a US dollar Swiss that I can take off. I can take the whole thing off for 0.15, or I can take the whole thing off. Take that trade off on its own and do a little DD control on the pound US dollar, which is the main problem at the moment. So I've got a total I can bank of 170 odd and a 150 drawdown. I've banked 128 already today. So I'm going to close out that US dollar Swiss. I'm going to close out that Euro US. And that's actually the worst trade for drawdown, which is against the CAD. So yeah, the best thing to do for me personally, I think at the moment, is to reduce some of this. Or is it? Or do I give it the benefit of the doubt today? Thinking hard. I think I might leave it actually. The only thing really that I would want to shut out. To be honest, I mean, I could use half of that just to close that whole thing out. But what I might do is give it the rest of the afternoon and see if the US dollar rallies or dumps this afternoon. At the moment, we are actually looking slightly bullish. So these lows are holding at the minute on the US dollar CAD. We are ever so slightly kind of grinding up. This previous monthly level here is kind of upside. So if we can get 125 ADR, I might then do some drawdown control. But I'm going to give it the rest of the day and see if we can hold to. Today at the moment is a bull day, so there's no point in doing drawdown control while we're in a bull move, because I'd rather this move up. And then what I can do from there is I could actually close that entire position and close that entire position, and just reduce the risk on it completely, and then just have that one on to try and get out in profit. I can't really make a decision on it. If I'm umming and ahhing, I don't know what to do, leave it. It's no obvious decision there for me, so I'm going to leave it as it is. There we go. So there's the zones done. Anybody got any questions? Any stuff they want to discuss? I've got a new version of the position trader EA, which I'm working on at the moment. I've discovered a snag. The marketplace is broken. I can't get it uploaded. So I've been working on this all morning, which is basically an update for the position trader EA, to include market reversal alerts and a lot of other features. So I will quickly run through the new features on it now, because I know quite a few of you are using the position trader EA and some of you are using the market reversal alerts EA. So I'm going to show you what I've done, which is kind of a combination stroke merger of the two stroke additional features, if you like. So the idea behind this is I want to drop completely the market reversal alerts EA, just because I'm not developing that anymore, but I'd rather everybody who wants to use the market reversal alerts, wants to automate market reversal alerts, if they want the position trader EA, to use that instead of buying the market reversal alerts EA, because it's old and it's decrepit and it's so unbelievably slow. So what I have done is, this is version 2, and I'll quickly run through the changes to it, so that you can see what is changed. If there's anything that you think, is anybody in here using the market reversal alerts EA for a start? That would be a good question to ask, wouldn't it, to start off with? Because if you're not, then it's not going to make any difference to you. I'm just adding new super whizzy features to the existing position trader EA for you to use. Let's bank some more money. Not anymore. Right, okay. It's probably pointless then. But anyway, I'll go through what I've changed. So if you don't know what the position trader EA already does, I'm not going to go through the whole thing. There's videos on the website about it. Go and have a look. Position trader EA page is there. The video explains what it does. There is a full manual which explains every input, every feature, every functionality, etc., etc. Yeah, so you can go and look at that. But so what I've introduced are some main new features to the position trader EA. So first one is only take new signals once per day. This input here. So it's not an issue with the position trader EA at the moment, but there's an issue if you use the auto trading strategy for ADR and RSI both set to true. This used to say use only one, right? It doesn't now, because you can use both if you want to. With this set to true, what will happen is if price pushes above RSI and above ADR and you get a signal, it used to take 2 trades. Now it doesn't. It will only take 1 trade. Yeah, on those. And the other issue we had with the ADR reversals specifically was if it pushed above ADR and somebody was using ADR reversal scalping and they took profit and then you got another signal, it would take a second ADR reversal down here somewhere. This now means that that won't happen. So let me show you an example quickly, which will obviously explain it. This is version 1.9, the old version. Which basically, was it the pound US dollar? Euro US dollar? I can't remember what currency it was. I was testing on. No, I think it was pound US dollar. Hang on, let me switch over to pound US. And it was on a low time frame. It was on M5. So the old version, what happened was when you got an ADR reversal like this, it would take a trade. Yeah, you see it's taken 2 trades. It's taken an ADR reversal and an RSI reversal because they both triggered at the same time. Yeah, and then price pushes down, we take profit, and then it takes another RSI and another ADR because RSI at that point there was still extended and ADR has also been hit. So the problem was it would duplicate trades, which sometimes is great. Yeah, if it does this, boom, continues down, fantastic. You've taken 4 trades, you've made 4 profitable trades. Brilliant. And now you're flipping in long on the ADR reversal. Excellent. Let's see if that one works out as well. Yes, great. So one day, 5 trades in, out, 100% strike rate. Fantastic. But on days where it goes like that, and then it goes like that, and then it flies off for 2 days, you will be in drawdown on that second trade. Most people, and this isn't part of the strategy I originally created, most people don't want that second trade. So the new version of the EA removes that. If it's set to trade once per day, it will take 1 trade only on 1 strategy. It will trade. If it hits target, it goes, thank you very much, I'm done. Yeah, which is what it should have done in the first place. So it's kind of a little bug, but it's not a bug because it's doing what it was told to do. So there's a logic change there. So if you run exactly the same thing on version 2 of the EA, which is this one here, and we take the same price action. Yeah, we've taken 1 trade, but RSI entry short. Yeah, the other one took an RSI and an ADR. So it's taken 1 trade. Yeah, and it's taken a second trade, but it's only taken 1 RSI. It hasn't taken a duplicate, hasn't taken 2 trades. Yeah, and then it's going to take its third. Now, if we set this to true here, only take new signal trades once per day, what will happen now is it will take that RSI short and it won't take the second one. Yeah. There we go. So we're in, we're out, no additional trades. Yeah. So that second trade short has not been taken. It is taking this one because it's a long. It's a totally different one. And this is an ADR long. That is an RSI short. So in the same day, RSI has pushed up. We've hit ADR. We've hit RSI. We've taken an RSI short. It's pushed down and it's gone beyond 1 ADR to the downside. So now we're taking an ADR reversal to the upside. Yeah. So it's doing exactly what it should be doing. This is what it should have done really in the first place. This is how I would trade when I was trading manually. So it's kind of fixed a bug, but the bug was actually very profitable. So what I've done is I've created it as an input so that you can have it turned off because your set files will have been working on the old logic. Second thing that people have been requesting from the market reversal alerts EA is the multiple of ADR for stop calculation was fixed at 1 in the market reversal alerts EA. You could alter that, so now you can. So if you want to do risk over half an ADR instead of 1 ADR, you can do that now. Yeah. So percent to risk over ADR stop multiple. This is your ADR stop multiple. So now you can adjust your risk. The other reason I now need this input is because you don't have to position trade with the position trader EA. Call me stupid, but you can. So you can use stop losses if you want. Yeah. So if you want to use those things that lose you money, feel free. A lot of people do. Specifically scalpers, but there we go. So if we take an ADR short, an RSI short, yeah, there's a stop loss, look. So instead of, if price pushes up, you take a second position and when it comes down, you make a profit. Now, if price pushes up, you lose your money. So it's off by default, but if you want to do stop loss trading, you've now got that option as well. Yeah. And I understand some people that are trading, look at it, right. So this is a great example. Look, ADR reversal strategy, in, out, in, out, in, out, in, out. 4 trades, 4 profits. But that's because the ADR reversal worked and you're scalping tiny bits of money. A lot of people are doing this. They're scalping with the EA and I didn't realize they were. So having this stop loss functionality where you can take multiple trades when you're at ADR, assuming that the ADR reversal is going to work, is actually very profitable. So there's some set files that are worth investigating with this new functionality. But anyway, so that's your stop losses. So now you can use stop losses if you want to. The default is true because it's a position trading EA. It's designed for position trading. Therefore, we do not use stops. So it will place your stops and then it will remove your stops, but only on normal entries, not on aggressive drawdown control. Any aggressive drawdown control entries that you use here in this section, they will always use a stop loss. They will never be removed. If you're getting in with 75% of your total portfolio position in one direction, you need to stop if it doesn't work, because if it doesn't work, you will blow your account. So they will not have stop losses removed on aggressive drawdown control. Another change that is made is to implement the same functionality for RSI as we have at the moment for ADR. So with RSI, you have the option when RSI is extended above a level, the close of the signal candle has to be above the level for the trade to be taken. If it pushes above RSI, and by the time the signal has happened, we are below RSI, it can or cannot take a trade. You have the option. So this is a stronger signal with it set to true, because it means price has gone way above and signaled above the line. Yeah, very strong push, very strong pullback coming. So that is now available for ADR. So if you set ADR 100, we have the option now, as it works at the moment, for if it taps into ADR and then comes down and signals, you get in here, ADR is there, your entry is there. If you set that to true, what will happen is now it has to be above ADR and the signal candle close has to be above the ADR level for a trade to be taken. Stronger stronger ADR reversals. So a bigger, stronger push before we get in. Which brings me on to the next change, which is a biggie, which is signals. So we had in the position trader EA just the one signal. I simplified the whole position trading strategy down into using a moving average. So we were basically saying you can pick a moving average, whichever one you want. If we open below it and close above it, we go long. If we open above it, we close below it, we go short, assuming the conditions of the strategy are met. What I've introduced now is 2 additional signal types. So a lot of people didn't want to use moving averages because they love the market reversal alert indicator, which I understand. It's brilliant. It does signal very, very strong reversals. However, the downside to the market reversal alert indicator is it misses a lot of movement sometimes. Prime example. Yeah, there's your reversal alert. There's your M pattern retest happening. There's your short. Now, if you get in on my moving average version, you were entered there. The market reversal alert EA entered there. Yeah, so that was your entry with market reversal alerts EA. That is your entry with the position trader EA. You now have the option, if you want to use a market reversal alert in the position trader EA as well. Okay, so all that happens is I have simplified the logic down for this. Let me just turn that on, reversal alert, and I'll turn off the moving average signal. So what you'll see basically is when we get to the high or the low of the day, let me just put period separators on a minute. Yeah, so we're at the high of the day here. Normally what you would have is you would have the market reversal alert indicator showing there, and it would start to signal some entries. However, there's no condition met. We have not hit RSI. We have not hit ADR. Therefore, there's no point in showing you the market reversal alert because we're not taking a trade because we haven't hit the conditions of the signal. So what happens is when we get the condition of the signal, the condition of the strategy met, which is either an RSI or an ADR extension, when we get one, RSI, there we go. So we've got an RSI now. So what will happen now is it will start to draw in the reversal alert. Okay, so there's your reversal alert. Okay, this is part of the reason that I did not incorporate this into the position trader EA, because look at that massive rally. Sometimes when you get ADR reversals, a lot of the time when you get ADR reversals, they're off the back of news. The rally is so hard, there is no selling in it. Therefore, the reversal alert is actually miles away from the actual ADR entry. By the time you get that reversal alert signal, you've missed 50% of the move. The moving average entry, however, will get you in much, much closer. Yeah, that's a 5, but you know, 5 or a 9 doesn't matter. Yeah, so your entry was there with the 5. The 9, your entry was probably there or there. Yeah, one or the other, but it's roughly the same place. So it's a better entry with a moving average, but the downside of obviously is it gets you in quicker with less confirmation. The reversal alert is a confirmation because the selling price action is actually being validated by additional selling. The buyers lost, the sellers regained control, which is what a reversal alert is. It's a structure break, market structure. So that's now incorporated, and if I let that just run out, you'll see, there we go. There's your reversal alert. So there's your ADR entry short with a reversal alert. However, ADR was all the way up there. So you've now got the option to say, I only want to take trades above ADR, and the close of the reversal alert has to also be above ADR. So they're going to be much, much stronger signals to take. Yeah, so that's basically the way that the reversal alerts work. It will only show if the high of the day is achieved with an ADR hit or an RSI hit. That will always be the case because you can't hit RSI or ADR without creating a new high of the day. Obvious, yeah, because it has to push hard to get a market condition met. Therefore, you're going to have a signal on a market reversal alert. The two cannot happen without each other. So that's the reversal alert. You also now have a third entry signal, which is my favorite price action signal, apart from the market reversal alert, which is the 3-bar reversal. So where are we? Where's the entry criteria? There. MA, oh, that's because I've renamed it. So let me just reset. I won't reset it, but that won't say that. That will say entry signal settings. It's because I've loaded a set file that had the old text in it. That would say entry signal settings. Use a 3-bar reversal. Okay, so a 3-bar reversal, for those that do not know, if you're in the member stream, you know exactly what I'm talking about because we've done multiple sessions on it. Is basically a very, very strong reversal pattern. Let's just find one. Let's just let the EA take one, and then we'll show you the actual pattern. Okay, so that is a 3-bar reversal. So it's a 3-bar pattern. It's very well known. Most people will probably know it already. It's basically a push, a pause, and a pull, or a pull, a pause, and a push. Yeah. So basically what it is exhaustion in the market and the opposite party taking control. So from a bank or institutional perspective, what this is the not the deviation, what's the word I'm looking for? The balance in power, basically, between buyers and sellers shifting. So the buyers basically have been in control of the market, and what is happening is they have run out of steam. So you get a final buy candle, followed by an indecision candle, which is where there is neutrality between buyers and sellers, and then the opposite party takes control of the market. 3-bar reversal, push, pause, pull. So there's a push in price, a pause in price, and then a pull. And opposite the other way around. So this here is a push, a pause, and a pull. Yeah. So the conditions of a 3-bar reversal are you need let's find a better one, because normally they're better at the top or bottom of a move. So let's just find a better reversal. Sure, there'll be one soon. He says as the market goes sideways for weeks on end. Right. So there's an ADR reversal. That's not a great one either. I just want to find a perfect kind of example at the right spot, basically. There we go. That's a good one. Perfect. So this is a perfect sort of 3-bar reversal. So it appears at the top of a move. Where the hell was it? There. There we go. So we've got a push up in price, a pause, and a pull. Yeah, so basically the rules are the push candle has to have a wick no bigger than, for me personally, and you can define your own rules in the EA, but for me personally, that wick cannot be more than 30% of the candle. Yeah, if there is a massive, if this is a green candle like this and the wick is 80% of the candle, that's not part of a 3-bar reversal. So I've set conditions basically where you can define the height of that wick. You can also define the height of that wick. For me personally, that wick can be no more than 20%. Yeah. So I want to see a nice big wick rejection there. We need a big rejection. And then the bear move, first rule is this close here has to be below the close of that candle. And then the second rule is this wick here cannot be more than 30% of the candle. Yeah. So what we're looking for is a push up where we've had strong buying price action. There's not a lot of selling price action in the candle. Therefore, there's not a big wick. The second candle has to have a big wick. Yeah. Because we want rejection. We want the buyers to have tried to continue this move, but failed. Therefore, there's a big wick because the sellers have taken control of that candle more than the buyers have, or at least equilibrium. The third candle, we want it to have pushed down very hard, and we do not want much buying price action. So the wick on the bottom of this candle has to close below that candle, and it has to have a very small amount of buyers in it. So that is a perfect 3-bar reversal, yeah? And that was taken at ADR. So price is pushed up to ADR. Yeah. Oops. So we've pushed up, we've hit ADR, and sellers have taken control of the market above ADR. We've taken the trade, yeah? So that's the third condition. So in the inputs, what you have is, under the entry signals, you've got candle 3 wick maximum, candle 2 wick minimum, and candle 1 wick maximum. So as I said, candle 3 is that one, candle 2 is the middle one, candle 1 is the most recent. So candle 3, the push, cannot have more than 30% wick. Candle 2 has to have a minimum of 20% wick. So I want at least 20% selling price action. You can make that bigger, up to you. But sometimes what you do is you get a doji like that. And personally, I found in my testing that 20% is kind of a decent level. It's just basically looking for a double rejection. So candle 3 and candle 2, you just want wicks on them, which basically means buyers got beaten. Buyers got beaten. Sellers took control. 3-bar reversal. It's very simple. And then the third candle, which is, candle 1, the wick maximum percent is 30. And that applies to the downside wick on the candle. This downside bit. Yeah. So big, strong down candle, basically, is all we're saying. So there you go. So that's the new signal settings. So the other great thing about the signal settings is you can select all 3. Yeah. So at the moment, what will happen is when we get above ADR or RSI, if you set all 3 true, what it will do is it will take the first one that signals. Yeah. So if you want to use a moving average, you can use a moving average. But if you get a 3-bar reversal before it gets to the moving average, it will take a 3-bar reversal. The market reversal alert will always be the last one. The market reversal alert is the confirmation signal. It's the stronger signal because price has already confirmed that the sellers are in control. Before that, you will get a 3-bar reversal at the very peak of the move, followed by a moving average cross, followed by a reversal alert. Yeah. So if you set it to true on all 3, most of the time you will take 3-bar reversals if the price pattern exists. If it pushes into accumulation and does not give a 3-bar reversal, the moving average will catch up with the accumulation and you will take a moving average cross. You will always get the market reversal alert after one of those 2, unless it just basically goes like that and then boom. Then obviously all 3 will trigger at exactly the same time, but it will only trade once on those signals. So for me, my personal preference would be to not use the moving average cross. It would be to use a market reversal alert, which means that if we get a nice tight reversal alert, excellent, that's what I want. I want confirmation of sellers taking control of the market. But if before we get the reversal alert, we get a 3-bar pattern showing us that the sellers look like they're getting in now, I'll get that first. Yeah. So for me, it would be setting both of those to true, but that is another backup. So you've got 3 options. You can use all of them, a combination of 1, 2, or 3 of them, or whatever you want, basically. Yeah. So that's the additional entries. It's going to open up an awful lot more doors for people to trade the position trade at EA that don't want to use ADR and RSI reversal signals, and people that are using the buttons to trade when they find their own strategies. Most strategies will use some kind of reversal pattern in mean reversion, obviously. So if it's not a moving average cross, it'll be a price action candlestick pattern. The 3-bar reversal, you can tweak with the wick sizes to make whatever you want. So you could actually make that easily, use hammers and shooting stars as well. So you can adjust the price action candlestick patterns. But, you know, if you're taking single candlestick patterns like a shooting star, like that, yeah. Oh, how perfect is that? Look, talk about explain exactly what I was going to explain on the chart. So, you know, some people look for that. That on its own is great, but it is just 5 minutes worth of price action. This, a push, a pause, and a pull, is a better confirmation. And look what you got as well, a moving average cross before the reversal alert. Yeah, so the reverse alert's always last. The moving average cross, either there, it would be there in this case. Reversal alert is there. Moving average cross is there. 3-bar reversal is exactly the same candlestick as the moving average, but it is a stronger price confirmation. Yeah, so so that's basically what the changes are. I think that was all of them. Reverse alert logic, new entry signal, choose more than one strategy, new option to trade once per day, stop losses, adjust the ADR multiple, added options with ADR reversal, and option to use 1 or more signal types. Yeah, so there you go. So that's the changes. So this is version 2. So if you're using the market reverse alerts EA now, there's not a lot of functionality you've got in that thing that you haven't got in here. There is a lot of functionality in that this doesn't do, but from my feedback that I've had, nobody's using any of it. So if there is anything in there that you still use, I can incorporate it into this, but I'd rather everybody moved over to this because the speed of backtesting with a position trader EA is more than 50 times faster than the market reverse alerts EA. And you can even speed that up by using the update on bar, not tick on the 1 minute chart, because basically most backtesting works on 1 minute candles anyway. So the speed of testing in this is, you know, even on every tick, it's immensely fast. So so that's the proposed release. Basically, the problem I've got is I can't get it up onto the marketplace because the marketplace says it doesn't take any trades. This is the default set file. It's taking plenty, but the marketplace is testing. For those that have ever sold anything on the marketplace, you'll know what I'm talking about. It's shit. So what happens is I upload this product, version 1.8 of the Position Trader EA, which is working absolutely fine. I make a couple of changes to it, upload it again, it goes, sorry, it doesn't take any trades. I put it in here, it takes a load of trades, and now I put it up there and it goes, sorry, it doesn't take any trades. It does take trades. There's something wrong with the backtesting automation system that they use to verify EAs. And there's forum posts as long as your arm about it, and they basically don't give you any information to figure out why their environment that you are testing on, which is their environment, doesn't work. So I can't get it up on the marketplace. I've tried for about 2 hours this morning. I've stripped out all the additional code that I've put in, uploaded it, and it still says it can't get it up. And it's pretty much the same as version 1.8. So I'm fed up to the back teeth of trying to use MQL5. So I've decided I'm going to do my own verification, my own licensing, and I'm going to have to launch this independently because it won't go on the marketplace. So, and obviously I'll do an MT5 version as well. But it kind of leaves me in a bit of a bind at the minute because MQL5 M5 marketplace is kind of broken. They're not taking payments by PayPal anymore. A lot of people are moaning because they can't buy anything. There's certain credit card types and countries which now cannot pay either. Me included, I have a business bank account that I withdraw to from the marketplace whenever I get funds in there. They won't even allow that to happen anymore. So there's something going on in the marketplace which is causing an awful lot of problems for an awful lot of people in an awful lot of countries. I think I'm going to have to pull it all out of the marketplace, unfortunately, and stop selling on there, full stop, which causes a problem because anybody that's bought stuff on there will not get this update because I can't get it up there. Physically, it will not squirt into the marketplace, and it's not me, it's the marketplace. It's not working. So unless I can get that sorted in the next couple of weeks, that's fine. I'll get it up. But otherwise, I think I'm going to have to just get my site done so that I can start doing it all direct. But yeah, stuffed really. Not a lot I can do with it at the minute. But anyway, that's the changes. So I just wanted to run through that today. Hopefully I'll be able to clip that out and I can then just give that to everybody, and because I wanted to explain what the new changes are. Yeah, and get it live. So I'm going to start using this now to live forward test it, just to make sure there's no bugs. So I will convert all my strategies over. But from a scalper's perspective, this is going to open a lot of doors because one of the most profitable scalping candlestick patterns is the 3-bar reversal. Always has been. On low time frames because it's the fastest indication you're going to get that price is reversing, and obviously now you have the ability to use stop losses as well. So for scalpers, you'll be able to take some very nice quick trades. A lot of people are still using the market reverse alert indicator on M1 and M5 on things like gold and prop specifically. So you can do that now with the position trader EA as well. So we will be able to when I can get it up on the marketplace. There you go. Any questions on that? Got any more money we can bank? Yeah, let's bank that. Let's bank that. We'll leave those two running. Actually, no, we'll bank that and we'll close that. There we go. 11.42 on the day now. M1, RSI, ADR. Absolutely printing money. Love it. Sujip, you're using the market reverse alerts, yeah. I use the MRA manually. Cool. Well, now you could use it for automated if you want. Mind you always could do anyway. Am I trading your RSI strategy in line with the positive swaps only? Yes. Yep. Yeah, so the RSI, everything I do position trading wise, everything I do is all in line with swaps. So the RSI strategy is all in line with swaps as well. So -5, same, yeah. So I will be getting in the same direction as I will with the zone trader strategy, but the zone trader strategy will obviously get me completely different entries. But this one is struggling at the moment. I just can't get many trades on, which was absolutely fine. But I know the reason that I'm struggling with it personally is because I'm trading the hourlies, and because I'm on the hourly time frame and I'm using an hourly RSI extension and an hourly ADR extension. Sorry, this is only RSI. We haven't had enough strong movement. Like we used to get 80-20 RSI extensions. Look at the RSI dash. It's flat. There is no signals. People in here that have not been in here before and seeing this for the first time will think, what is it? Normally it's got red and green blocks on it, but there's nothing happening. It's dead. So that's the reason I'm kind of struggling with that strategy at the moment. But yeah, it's still in line with swap, because if the trade is wrong, I still need to be holding for however long it needs to be held for, because it's a swing strategy, isn't it? So won't the parameters for the 3-bar reversal mean you miss some great entries with the moving average? I've answered your question. Yeah, so it'll take whatever you want. That's the beauty of it. I don't think you should. When you're trading, if you were using a 9 rather than a 5, for example, the 9 entry is there, the market reversal alert entry is there, the 3-bar reversal entry is there. Yeah. If you like 3-bar reversals, set it to true. If you don't. But you have the option for anything. So if you just want to get in when RSI is extended and you want to get in as tight as possible, you've now got, if you look at the 3 reversal types, if you look at them in a simple form, are worst price entry, medium price entry, best price entry. More likely to fail because there's less confirmation, less likely to fail because there's more confirmation, a lot less likely to fail because you've got awful lot of confirmation, and the guys that tried to sell last time have just taken control of the market again. Even more confirmation is a retest of that zone, which is the market reversal retest. Yeah, I haven't included that in this version, but it is something that I could include. I personally, if you've been in here for any period of time, you know that even with the market reversal alert indicator, I never use the reversal retests, because there are so many times when you will get a reversal alert and it will just go. It will not come back and it won't retest. That M pattern that we're looking for, yeah, that's your reversal, that's your retest. Beautiful. But how many times do you see A-shaped recoveries and V-shaped recoveries that never come back and retest the area they've left? You miss all of those. And half of the reversals do not retest. They don't form an M or a W. They form a V or an A. So they're just different signals. This one at the moment, unless it breaks that high, this is an M pattern. If it doesn't, that invalidates. But then so does the moving average cross and the 3-bar reversal. Doesn't matter, does it? Quick entry, medium entry, slow entry. They all are entries. Which one's the best? Depends whether the price does what the price does after it, doesn't it? Yeah, we can't tell which is the best to use. Give me 100 different trades with that, and I'll show you 50% of them that did work and 50% of them didn't. Same with that, and same with that. Everything's got the same strike rate, isn't it? Because price either goes up or down after it's happened. There is nothing more. That's going to invalidate that. Right, so that the US dollar CAD that I said I was going to hold on to, and I decided not to do the drawdown control on it. It does look like it's going. So that's the reason I'm holding it today. It's because it looks like it's reversing up. So hopefully, if we break that high, we should get a little pop out the top today. And then we're heading up to this area here, which is 125 ADR. And that will be a nice little exit for drawdown control. I love my position trading EA that much more now. Good. Well, if I can get it launched. I said I can't get it up into the marketplace. I don't know if I can show you. Let me see if I can show you how crap it is. Oh, I've deleted it. Or did I? Hang on. Yeah, I deleted it. I uploaded a new version, and basically, in true meta quotes style, the error message you get is unable to trade. Thanks. Why? I don't know. And it gives you a link to click on, which goes through to all of the error messages, but it doesn't tell you which one. But I upload the version 1.8 that is on the marketplace right now, today, and it gives me the same error. But when I uploaded it, it worked fine. So something's changed between when I uploaded it last time and when I uploaded it this time. The code hasn't changed, but something there's changed. They won't say it's changed, obviously, but it's physically impossible for me to get the product out. So frustrating. And it's just, I've had it before, and you go on the forums, there's tons and tons of posts about I'm trying to upload something onto the marketplace. It doesn't give me any reason why it won't work. No, it doesn't. So try this 20,000 lines of solutions that have worked for some people in the past and see if one of them works. You could spend a month changing things, trying things, and none of it works. And then all of a sudden one day it will work. And it won't be because of what you've changed. It's because for some reason they've changed the test conditions, which now work. Something's broken. So I've got to take that out of their control and put it into my control, because at the moment I can't do anything with it. It's just stuck. It's awful. Horrible position to be in. I wanted it out this afternoon. I just can't do it. Anyway, I tried to buy the new dashboard, as you mentioned in the live stream. I wanted to get it before you put the price up, but it would not take the order. Thought I was being clever. Yeah. This is the problem. I mean, there's something going on. I don't know if it's because of the Russian connection or what, but we've had it in the past. Last year, at some point, PayPal was removed as a payment method, and then it suddenly came back again. When I asked about it, they said they've got temporary problems with their integration with PayPal. So I'm a web developer by trade. There's no problems with it. PayPal are not the type of company that have temporary problems, because it would cost them billions every day in finance. So it's not going to happen. There's a problem somewhere else. And obviously it's cloak and dagger, isn't it? You just don't know what's going on. So easiest thing for me is just to take it out of the equation, because I can take PayPal. I don't care. Interesting. You would say that because I trade your MRA indicator with dashboard. I've noticed many do not retest. Yeah. Yes. Yeah. So I mean, this is the thing. If you look at market reversal alerts, I've just seen yours, David. I will come back to you in a minute. Let's just look at some others. That's terrible. And that's the other thing about this. You know, you get odd with the market reverse alert indicator. You get these anomalies where you've got the high and the low at the same candle because of news. And because of the logic, this is the reversal alert, but it's huge. But there's a 3-bar reversal somewhere down here. There's one. There's a 3-bar reversal there that got you in here, not here. Yeah. So there's lots of little anomalies. But if you flick through and look at recent reversal alerts, that one retested. Look. So there's your M. But if you took the retest, you got in there. If you took the reversal alert, you got in there. You got in at the same place. This is why I didn't bother with those. Occasionally, what will happen is you'll get the reversal and the retest will appear here. Yeah. Or something, and you get a much better entry. But 90% of the time, the reversal, the initial reversal alert and the retest are in the same place. So it does not make sense to wait for the retest. Just take the reversal alert. I'm not going to be able to find one now, am I, that is actually an A shape. They're all going to be, because market's going sideways. There you go. So there's one. Look, beautiful example. Look. There's your reversal alert. We didn't come back and retest that at all. So if you were waiting for a retest of that short, you missed that. It's, you know, this is what we're interested in. We're interested in where's the last batch of sellers when a new high is made. So that's the reversal alert logic. When you make a high, we've got buyers in control. Where's the last batch of sellers that got beaten up? Because if they are still shorting into that position, when they get control of it, everybody that's tried to go long will flip short. And this is what a reversal alert is. It's basically a changing control of the market. It's the balance between buyers and sellers shifting. It's what we call the imbalance, isn't it? So the imbalance is long until the imbalance is short. It just signals the imbalance in the market. The confirmation is the retest and run. So that candle there, that basically there's your buyers. We came down. The buyers took control of the market from where they last attempted to take control before the sellers made a new low. That was your entry signal. When the sellers try to retake control and the buyers overpower them, that is your retest. So it's basically, if you think about it, all it is second leg. Yeah. So there's your first leg of buyers, and there's your second round of buyers, your second leg of buyers. The retest is your second leg of buyers. It's a confirmation signal, but there's a 3-bar reversal down there that you missed. There's one in there as well, probably. There you go. There's absolutely perfect example. Pull, pause, push. But there's your reversal alert. In this case, your reversal alert would have triggered at the same time as your moving average, but before the 3-bar reversal. Yeah. So, you know, they're all going to happen in different ways, but all three of them are very good indicators of shift in market structure. So if you have all three turned on, you just take the one that comes first, because it's going to give you the best entry, isn't it? The first confirmation of the opposite direction. Would the -5 be dependent or different for others based off their account size? The -5. No, it's not to do with account size. It's to do with your broker swaps. So for me, I don't want to pay more than $5 swaps on a contract. Yeah. So this is my broker. They charge me $760 for longs and they charge me $170 for shorts. So I'm happy to go short. I'm not happy to go long because it's too expensive to hold. If I get into a squeeze of 6 weeks on something and I'm paying $760 a contract, first of all, it's not that expensive if you've got 1 or 2 trades on. But after 6 weeks, I've probably got a serious amount of lot size on. I do not want to be paying that much. So it's broker specific. Your broker on Aussie dollar, New Zealand dollar may be charging you £4.50 swaps, in which case you go for it. You go long and short. You take both. But it's broker dependent and it adjusts with interest rates. So the way that swap works is it's the interest rate differential between the Australian dollar and the New Zealand dollar overnight bank rate multiplied by your broker's added amount and your broker's overall net positioning, because they will want to entice orders in a certain direction based on their net positioning. So these will change sometimes without interest rate changes, but not much fluctuation. So, but you trade what you trade based on your costs, and your costs are going to be different to my costs. Unless you're with Robo Forex, then you're going to see exactly the same as I see, cost-wise. Tralala, does changing the settings on position trader EA while positions are open messes anything up? Only if you change something that changes the way that it will do drawdown control or profit taking. So no, you can change whatever you like. If you know, if I'm in here on this account and I decide actually I want to use a 1.1 multiplier, that's fine. I can do that. It's not an issue. Next trade it will take will be a 1.1 multiplier, not a 1.3. However, if I change my exit targets to be 0.1 ADR and it's 0.1 ADR, it will immediately close the trade out, obviously, because it will do what you're telling it to do. And if I change that from a 1 to a 0.1 and I am in 0.1, it will close it. Same with drawdown control. If I suddenly turn drawdown control on and say, I want you to start closing out half my trades when they're 1% in drawdown. If you've got 7 trades on that you've been in for 6 weeks and they're all in 1% of drawdown, it will immediately close 50% of every single trade because that condition is met. All these are conditions. If the condition is met, the EA executes every time a bar closes. So if you change something that isn't changing now what the situation is, then it won't do anything. But you can change whatever you like. Yeah, and adjust it on the fly. It's not a problem. So it's dependent on broker and account type. Yeah. What indicator does the swaps appear on your screen? That's the position trader EA. So if you have swaps turned on here, use a maximum swap, it will show you the swaps. If you don't have it turned on, it won't show you the swaps. It's not an indicator. It's part of the EA. Same with the zone trader. Yeah, it's all built into the EA, wherever it is. Somewhere. Where's the swap fees in here then? It's in there somewhere. That's the text offset. Where's the actual... Oh, it's at the top, isn't it? I think I moved it to the top. Yeah, it's here, look. So only trade in direction of good swaps. True, -5. There you go. So this is a good example. Look, Aussie dollar CAD. I can trade the Aussie dollar CAD in both directions because swap shorts are $4.10 negative. Swaps long are $3.40 negative. So I'm getting charged swaps regardless. But what it means is I can just go and bounce around with price and I will be charged something all the time. But obviously some currencies are going to cost more than others. Yeah, I've paid $19 in swaps on this $1,000 profit that I've made. I've paid $19 in swaps on it because I'm trading low swap instruments. If I was trading a load of yen, which is $30 to hold it or $40 to hold it overnight. I don't know. Pound yen at the moment is $40 to hold it. CAD yen costs $20. New Zealand yen, $20. US yen, $30. So if I short the yen, like I did here, and this is one reason I'm not doing it, the cost of holding that position for 9th of December to the 17th of January, so that's about a 5-week hold. The cost of holding that was about 20% of the total profit of the trade. I don't want to give them 20% of the total profit. It's too expensive. So until the interest rate differential drops, i.e. the yen put their interest rates up to something like 1.5, and the US has dropped their rates to something like 3.5, then all of a sudden the interest rate differential will mean the swap cost will be lower. But, you know, the swap long on this is $9.55. So if I get into a long position and hold it for 5 weeks, they're paying me $10 a week, more than that, to hold it long. So there's an advantage to holding it long. But I think the yen is going to strengthen at the minute with what's going on in the world, and I don't really want to be long in it. So that's my personal choice. But I'm just not trading the yen. But, you know, longs on the Swissy. Again, that trade taken here, look. Very expensive trade. 6 trades, 6 weeks, cost a lot of money. So I'm not doing it anymore. I'm long only. I'm just longing. As you can see, there are no short trades being taken. I am just longing this. And the market will go with the swaps. This is the other beautiful thing about swaps. We are not the only people that pay them. Yeah. It's the overnight rate. Yeah. So when you look at the news and you see the official cash rate, the cash rate, or what is known as the overnight rate with some countries. Yeah, this is the bank's lending rate between each other. They also pay swaps. Yeah, so they will be paying interest rate differentials on their holdings of each currency. So it's in the bank's interest to drive the price as much as they can in the direction of the interest rate differential that is positive, not negative. So, for example, here on the US dollar Swiss, banks holding US dollar more than holding Swiss will earn interest overnight, $5.40. If they're holding more Swiss currency than US currency, they will lose $14.60 overnight. So it's in their interest to buy more of this to earn interest on it, which does what? Drives price up. So the currencies are driven also in line a lot of the time with swaps. It's not always the case. Look at Trump at the moment. It doesn't matter. Trump will destroy the market regardless of what the swaps are and what the banks want done. But that's the way it all works. So falling in line with that was obviously beneficial. I'm still in shock, but so impressed with your scalping returns. I'm happy with... This is not a real account. This is a demo. I'm just going to close some more profit out. Sorry, just to annoy you a little bit more. I'll just close all that out and just make more. Just make some more money. Well, it's easy, isn't it? I'll tell you, I'll leave this account running every day. I'm up 43%. 72% on the account in the last 5 weeks. This is a demo account, yeah? And the only reason all of these trades is being taken is so that I can test the new dashboard. The whole purpose of this was I was going to set up an environment, and I said, on the 1 minute chart, just get me into trades. Every time RSI gets extended on the 5 RSI above there or below there, take a trade. And every time it moves by 5% in 5% of its average daily range against the trade you just took, just take more. Just keep buying it when it's going down and keep selling it when it's going up. And wait for the price to go back the other way when the banks take their profits. That's literally all it is doing on a 1 minute chart. But go and look at the market and look at what it's been doing for the last 2 weeks-ish. Yeah. If the market suddenly decides, I'm going to do that, this will explode. Yeah. So all the time, and this is what I keep saying about market regime, market condition is not static. It's fluid. 80% of the time, roughly 70 to 80% of the time, the market is in balance. Yeah. We are happy conducting business within a range of prices. 20 to 30% of the time, it will attempt a price discovery outside of the range to determine whether or not there is institutional interest to trade at that price. If there isn't, it will come back. We've done a lesson on this in the members group. If it decides after that it's happy to trade there, it will come back and see if it can trade back in this area again. And if it can't, it will continue to trade higher. And this is where we get a higher high put in. And then it will try and trade up here, and it will come back and see if we want to trade there. And if everybody that made that happen is happy for that to happen again, it will move up further. And this is where we get market structure trend from. This happens 20 to 30% of the time. The rest of the time, it's happy. Because this is hard for banks and institutions to achieve, because the amount of volume of imbalance in price, imbalance in currency holdings to make this happen is difficult to sustain, which is why as mean reversion traders, we wait for them to do that. And then we take profit when they take profit, because they can't sustain this, because there is a limited amount of capital available in each bank and institution. And unless they all agree on the same direction at the same time, it's never going to continue that way. And if you think about it, it can't do that, can it? Because if they're all doing this at the same time, who the hell is selling to them? A market is a transactional instrument. For every buyer, there has to be a seller. It is a zero-sum game. You cannot buy. I cannot press this button now to sell unless there is somebody else that has the opposite opinion to me and wants to buy it. That is a transaction in a market. It cannot happen. Therefore, it cannot continue to do that. It has to do this. And as soon as banks and institutions see this start, when they've got a load of money, they accelerate the move to the downside. Market structure. Yeah. It's just favorable conditions at the moment. But if you're trading prop at the moment, well done. You've just paid your mortgage. But, don't get me wrong. This is not going to sustain. This won't continue. If it does continue, I shall shut up and I won't come back stream again, and I'll just do this for the rest of my life. But I'm pretty sure if you go and backtest this set file on a 1 minute chart, you can't backtest it multi-currency, obviously. You can only backtest it on one currency at a time. But I'm pretty sure if you go and backtest this, you'll find that at some point it will blow. For a start, it's using 1% risk. That's way too much risk. You want to be using a lot less risk. But you'll make a lot less money, obviously. But this is what the guys on YouTube that are selling you the courses are going to tell you. This is the way to trade. So they'll come on here and they'll show you all of this, and they go, this is, if you want to achieve this, it's $299 a month. I'll put you in my private group. And when this account blows, I'll then lose all my members from the private group. I'll wait for the market regime to be correct again. Then I'll start YouTubing again. Then you'll find me. A load of new people will come on and go, oh, this guy's amazing. And then all of a sudden you'll come in my private group. I make 250 quid a month for you for 2 or 3 months. They'll blow the account and then I'll start again. Anybody know anybody on YouTube that sounds like that? People that own blue Porsches quite often are like that. But anyway, that's what they do. That's all they do. Yeah. Smoke and mirrors, a lot. But it does work. Yeah. As long as the market, this is the thing. If you have a strategy that works in this type of market and the market stays like this, you will print money. When it does this, you will not print money. When it does this, you will not print money. If you have a strategy that makes money and prints money when the market does this, when the market does this, it will not print money. When it does this, it will print money. There is no strategy that works here and works here and works here at the same time. Mean reversion, breakout, and trend. There are only 3. You just pick one. On the 1 minute scalp, since you're generating high profits, I'm going to test out what it would look like if you place a max DD percentage to close the entire position. Yep, you try that. That might well generate decent results. Try it. Test it. It's short term though. You know, I'm literally pressing. I'm not pressing anything. The EA is pressing buttons based on RSI. Yeah, I mean, it doesn't, you know, RSI works. This is why I use it. The amount of people that tell me, oh, you're an idiot using RSI. Have you seen all the videos about how crap the RSI is? I don't know. For the last 5 years, I've made 6 figures a year. But anyway, you carry on telling me it's crap. I use it every day and make money with it. But it's the same as everything, isn't it? Everybody's got a different opinion. That's the whole reason we trade. Because when I say the RSI is extended and I want to short it, there's a guy going, RSI is extended, I'm going to long it. One of us is going to be right. He is going to use a stop loss and lose his money. I am going to scale into the trade and wait for the market to come back in my direction and make money. That's the only difference. We're using the same indicator, trading in the opposite direction. I've just got a different money management strategy. It's the only difference. I don't know where it's going. I don't know how accurate this is going to be, but it went up there and then it came down. It went up there and then it didn't come down. So when it went up there and I shorted it, I waited for it to go up again and I shorted it and then it came down and then I got out. It went down and then it went up. It went up and then it went down. That's all price does. Up and down. I was saying to I think it was in the members stream the other day, I went to have coffee with some friends from spinning and somebody asked me what I did. And I said, I trade financial markets. And I do stock trading. And I was like, no, nothing like that. I just trade Forex mainly. And he said, the trouble with that is you don't know whether it's going to go up or down, do you? And I went, that's all it does. And everybody started laughing at me. And I was like, think about it. It can only do 2 things, up and down. So if it's going up, where's it going next? When? I don't know. They thought it was hilarious. Most people do. But you think about it, that's all it does. It goes up and down. All your job is to do is apply risk. Done. But it works on this. But it's not a stable strategy. And if you can make it one, David, please send me your set file. I'm sure there is a way. This is the thing with this type of strategy, and this is what, like, people, I'm not going to mention any names, but people that have groups that sell membership type things for hundreds and hundreds and thousands in some cases of pounds every month. What they're doing is they're giving you access to a short-term thing that will work. And this is useful for doubling accounts, this type of thing. So I'm up 72% on this. It's a demo, yeah, but it's up 72%. It's not doing anything clever. All it's doing is waiting for market movement up and down, and market is moving up and down, therefore it's right. So this is the type of strategy you can use, what I would call an account doubler. What everybody wants to do is take 1,000 and turn it into 2,000, risk more to make it 4, risk more to make it 8, risk more to make it 16, and, you know, compounding. Everybody gets obsessed. I've been there. I've been through the compounding thing, and it doesn't work because the losses are compounded as well. So when you're trading 0.01s here and you're trading 1.1s here, the losses are also faster and bigger. The equity curve goes like that because the compounded losses are exponentially bigger than when you started. But if you want to take 1,000 and make it into 2 and make it into 4 and then reduce the risk by 75% and start using that as a proper trading account, this is the way you do it. But if you start this on the wrong week, when the market goes into a parabolic trend, you will lose your money instantly. So don't forget, 80%, 70% of the time, this will work. The 20% of the time it doesn't, you do not know which day or week or month that is going to happen. So if you start in February, and from February to July, the market is just range bound, happy days. If March, we go into a parabolic trend because Trump has been assassinated and Putin's taken over America, yeah, it ain't going to work, is it? But you can't see the future. And so this is very high risk, but obviously very high reward. This is what it's all about, risk reward. This is what people talk about all the time, isn't it? I'm risking a lot over a short space of time, but what I'm doing is taking my profits when I see them. Yeah, so when this is green and it goes there, yeah, I'm just waiting. And you've got to deal with a drawdown as well. The spacing is so close. How many entries is it taking? Oh, no idea. So this is today, the 18th. That's what it's closed out today. So the 17th was yesterday. That's from there to there. 16th was there down to there. This isn't running all day as well. So it's only running when I open this terminal. This is my development terminal. So this is only actually running when I'm doing development. So when I launch it, it starts taking trades. So I shut it down every night. So, but yeah, it's taking quite a few, look, obviously. That's the 10th down to there. Oh, sorry, the 19th. Yeah, 19th down to there. Sorry, no, I've scrapped that. Oh, God. I was looking at the wrong thing. I was looking at the time. Right, these are the 19th. All these trades down to there. So that's today's trades. Yeah. Yesterday's trades start there to there. And then Monday's trades, it wasn't open long on Monday. It only took 5 or so. 14th was open from there down to there. So yeah, it'll get in all the time though. Obviously, it's on the 1 minute chart and I'm using a 5 RSI. What we're saying is if there's been a push in 5 minutes, short it. This is the 5 RSI. If there's been relative strength in one direction for more than 5 minutes, short it when there's a moving average cross. It's going to trade all the time. All the time. Yeah. Don't get too excited about it. Seriously, it's not a strategy. It is a strategy. It's just RSI mean reversion. It's what I've traded all years and years in here. I just do it on the 5, the 15 using hourly and 4 hourly RSIs. I'm using 4 hour and hourly swings, not 1 minute swings. 1 minute swings, you're going to get thousands of signals, aren't you? All the time. It's just going to trade constantly. You're going to have to be on the ball. You're going to have this thing open, and you're going to be needing to watch this all the time. But, doing what I'm doing, take it, drawdown control. Take some, drawdown control. You've got to stick on top of this thing because this is what's going to kill you if it goes wrong. You need to keep this, anything that's red, shut it fast using this and build up a buffer, basically. This shows you, this is the whole point of it. With the member stream we did yesterday, the whole point of the stream was to show you that it doesn't matter really how you get in. What matters is how you get out. Yeah. When the market moves up and down, you get in and you get out. That's it. You move, it's like if it's going up, you sell it. If it's going down, you buy it. Everyone else buys it when it goes up. That's why they don't make money. It's gone up. You missed it. Yeah. You wait for it to come down. You can't pick when it's going to come down. So you get in and you wait for it to come down. That's trading. This is what banks and institutions do. None of them know where price is going. They can't control it. Yeah. Many times as you might see ICT people saying there's an algorithm controlling it, it's a load of bollocks. ICT's been outed as a con man for years. Yeah, there is no algorithm. It's institutional order flow. Barclays, HSBC, and Citibank do that. NatWest and JP Morgan do that. If these guys have got 1 million, these guys have got 500k, price is going up. Yeah, these guys do not know what these guys have got, who don't know what these guys have got, and none of this lot know what these guys have got or these guys have got, and they don't know what he's got. Yeah, none of them know what anybody's got. What they do have is a pot of cash, and they need to execute orders in the market. The price they get will be determined by the order flow and the differential between the buyers and the sellers. That is trading. No one can predict price movement. But once it's gone up and those 100 million or whatever have disappeared, there will be an imbalance of orders up here, which will mean price will come back down again. Yeah. Think of it like 2 glasses of water. This one's half full, this one's empty. You fill that one up, this one's heavier. You fill that one up, this one's heavier. The heavier moves up and down. No one knows how much water is in the market. There's $7 trillion a day go through it. Probably more like 10 trillion now. That's an old figure. And all it does is it drives it up and down. So when it's gone your way, you take it and you put it up here. And when it's not gone your way, you wait. SIH didn't take any trades in the last 2 days. Is there a problem on my side? Yeah. Don't think I'm short on the Dow and I'm hedged on the NASDAQ. Taking trades. It's your end. Right, I've got to go. I'll be back tomorrow for the member stream, tomorrow morning, and then back on Friday for the wrap up for the week on Friday. So we'll have a look at all the news. Be aware this evening, obviously, FOMC, and I'll try and get this EA sorted out so I can get it on the market. But if I can't, I'm going to spend the rest of this week sorting out my licensing thing. Be aware this evening, you've got FOMC. 7 o'clock, might be some volatility coming through, might not. We'll have to wait and see. And you've got Australian dollar overnight. So anything that you have exposed and profit on Aussie or US that is worth taking, take it. I haven't actually got any US profit at the moment, so I've taken it, haven't I? That's why. I've already taken my US profit. So obviously just bear in mind, if you've got a load of profit sitting in your P&L that is basically Aussie or US related and it's worth taking, take it. Because if it goes the wrong way, you're going to lose it. You can always add it back on again, but if you've got like a 0.2 and a 0.13, you've got a 0.33 there, you can just stick in the bank and take your day up to 1.5%. Take it. Yeah, because it might go your way, but it might not. So just have a check of your P&Ls, obviously, before the news, just in case. Like that US dollar Swiss. I'll be taking that today before the news, I should imagine. I'll see how it goes in the next hour. But there we go. Right, so yeah, I'll be back tomorrow. Anything you need, let me know. I'll be in Discord. Other than that, back tomorrow for the member stream. And on Friday, I'll be back for the recap of the week, and then we'll see where we go from there. All right, have a good day. Anything you need, let me know. Otherwise, I'll see you next time.